Welcome back to Ferocious Education, this is Ed. If you would like to know why Sundial is worth at least double what it is right now, stay till the end. Let's jump right into this one. So Sundial Cannabis, I did talk about this one in my last video, especially dissecting their earnings. Today I'm going to be pinpointing a couple of things from earnings, but we're looking into what's the next big thing. So going on towards their presentation, first of all, we're able to get a little bit of a new perspective because this presentation is as of March 2021. It's new. So first off, they have a cash amount of around almost $720 million as of March 15th, 2020. And they're giving you a little bit of an overview from 2017 to 2020 with an enterprise value of around $2.6 billion and a market cap of 3.4. You might see that the price over book is above 1, but I'll explain why this is significant to keep in mind later on. In terms of debt, null. No debt, which is amazing there. Shares outstanding around 1.7 billion. And moving on, some of the things I did want to highlight here is regarding Sundial's finances and how you can get to see easily the amount of money they raised. It's highest at any point ever since September 2019, which is quite amazing in my opinion. And we get to see as well reduction in the total cultivating cost per grams from 118 to 111, showing that they are reducing cost, increasing the number of cash, and also increasing revenue. Now, in terms of this sense, how they operate, they have around 448,000 square feet. Each ones are put into small scale batches, and each of these small scale batches have around 200 meters square and around 600 kilograms of production. And they have sold around 27 million total grams, equivalent licensed producers of Q4 2020, and is an active discussion for additional wholesale transactions. Now, you do recall this is a little bit of a deviation from what they're looking for. I'm not sure why they're going as well back to wholesale, but many industry peers are moving away from internal cultivation, relying on micro growers and wholesale spot markets, but they're still working with additional wholesale transactions. So they are really trying to capture the best out of both worlds, which is something quite impressive in my opinion, because you're either looking for retail or wholesale, and they're trying to go for both. And they have different products. Of course, we already are familiar with these ones: Grasslands, Palmetto, Sundial, BC Weed, and Top Leaf. And obviously, if you watched a lot of my videos, you would already know I've talked about these for a while. Vape, pre-rolls, flower, concentrations, etc. There's 22 videos or so of Sundial, so you should be familiar with these already. Moving on. You get to see a little bit of the focus here. The main focus of the market itself is towards dried flower. Preceding that is others, such as edibles, chocolate, all that stuff, pre-rolled, and then vapes, or vapes then pre-rolled. And we're looking here in terms of the average percentage of the market segments itself. And you see the Grasslands, the discounts are currently the highest, which is a bit of a change from the last presentation. You would have to watch my previous videos to understand that. And you're seeing that, well, of course, because maybe the pandemic, people losing their jobs a little, discounts has seen a massive increase. Value here is a little bit dropped than usual compared to core, and core and discounts are the highest. And this is kind of understanding because the major part of their operations are coming in from their main house brands of Sundial, and then coming on following that's Palmetto. And doesn't tell us much in that perspective, but we're able to see that their market share there is around 2.7%, and so it is small compared to 5.1% and 3.2% in Q1 and Q2 and Q1 respectively. And so the market share has definitely shrunk. So you get to see it went through 3.2, 5.1, 3.5, 2.7. So imagine if they were to increase their current market share, their definitely next earnings will be a lot bullish. And a big part of what they're doing here towards increasing the market share is increasing towards the edibles, things like chocolate, all these acquisitions that they're buying in, which I explained in my last video, which they're basically increasing their foot in the market through some of their partners or some of the acquisitions they make. And in terms of the total capital deployed, you're looking around $90 million, and they've realized tax efficient gains of around $9 million there. And some of the Q4 highlights is 3% increase in adjusted gross margins versus Q3 2020, a 6% decrease in the cultivation cost per gram, a 5% increase to 86% branded cannabis sales mix in Q3 2020, and 100% decrease in the debt principal amount of versus Q3 2020, and 187% increase in unrestricted cash business versus Q3 2020. And then the next biggest thing here is their partnership with SSB. And so they're going to have a 50-50 joint venture between Sundial and SAF that will leverage a strategic financial and operational partnership to generate asymmetrically enhanced risk-return opportunities in the cannabis industry to provide exposure to a portfolio of attractive debt, equity, and hybrid investments. The JV expects to pursue various mandates, which potentially includes a Specialty Opportunities Cannabis Fund, initiate commitment from SNDL of $100 million, and a Canadian SPAC, and other investments. So that is quite massive because they are literally investing and putting in funds for the entire cannabis market because of this massive opportunities that we as retail investors have provided with them about raising that much capital. They raised so much money that they have $700 million and they paid their entire debt. And by 2025, the global cannabis market is expected to reach $47 billion, which is more than double of 2020. The access to capital remains hard, and so initiating this kind of fund will help the industry grow. And Sundial, in respect, has $100 million in interest in that initial fund, initial commitment, of course, and that will tap on towards other market shares. In terms of proven track record, SAF has received attractive weighted average returns since first investing in the industry in 2019, and SAF has consistently generated attractive risk adjustment returns. Top tier partners, the CEO of Sundial and CEO of SAF have been working for more than 10 years together, and SAF has located around more than $2 billion of capital across more than 30 transactions since 2014. Robust deal pipeline, which is active more than 500 million global deals with pipeline of attractive debt and equity opportunities. Also corporate banking relationships, the list goes on. And for this here, we're looking at, and don't leave yet because we will talk about why Sundial is worth more than double what it is right now. And in terms of approximately, you're looking at $20 billion in 2020 to 2025, $47 billion. This is not what I'm talking about. We'll talk about it in a second. And quick thing, they talk about distinct market opportunities. In the United States, market fragmented and severely underfinanced market due to the regulation hurdles. Opportunity, secure debt by borrowers with premium fundamentals and hybrid securities investments. So they're talking about the US market that we've been speculating for a while. Next, you're looking into Canadian market. The market has access to capital concentrated with largest LPs leaving the middle market in flux. The opportunity is to consolidate premium offerings and scalable IP from smaller IPs, as we talked about before. Next, international, developing a landscape expected to emerge and expand for years to come. The opportunity here is to selectively participate through direct investments and indirect export opportunities. And that kind of covers a little bit of their summary. And now towards the good stuff that I was talking about. Before we go there, SAF Group, this is their website, safgroup.ca, if you want to check them out. They're a Canadian investment management firm. And we've already gone a little bit towards what the earnings entails. Of course, the massive cash, their investments, their funds. And if you'd like to get to see a bit more about this, my last video goes in depth into the earnings. And now the good stuff that I'm looking for, which is their price over book. Before going there, and I know I've been teasing you for that over a while, think about what has happened in 2020. They have a new CEO compared to the last one, and things really went around. So definitely, this CEO seems to be doing a lot of stuff that is right. At least things that we recognize that is right. Price over book for Sundial, based on Finviz. I'm not sure how accurate this is. And what I'm truly trying to relay here in price over book, and yes, it's 3.48. It was previously in double digits, around 10 or something. Or even I think at some point it was almost 20. But because they raised so much cash, they eliminated the debt, the price over book is now more valuable. And if you were to adjust towards the market size increasing and their shares and acquisitions increasing, they definitely are in a place where they can increase the price over book easily. And currently, their price over book is 348. You're looking at an SP 500 of 425, which means that it has at least 25% potential of increasing just to capture the average of the SP 500. The current maximum and the minimum and the median, ignore that for a bit because we look at the chart here, we're looking at 425, the market is increasing exponentially, and so that is something that we can consider when we're looking in terms of all these different companies about their price over book. And before we move on towards technical analysis, if you would like to go on and check some more content like these ones here, make sure to subscribe and turn notifications on for this channel. Comment down below, what do you think about this one? Also, you can join our Discord to kind of cultivate this kind of chats and basic discussion of Sundial and other stocks. Let's jump right towards technical analysis now. Now, on a 1 week perspective, we're seeing here things are looking a little bit interesting because the trading action zone is between $1.23 and 95 cents. So we can expect reversals within that region, but not currently looking at it. The ADX is sitting here somewhere quite interestingly above 50, and that's where you can start expecting pullbacks. And we've seen that pullback coming in from $1.73 all the way at some point to $1.42. Everything else looks like it's more of an accumulation zone, really. If we were looking into a 1 day perspective, we start seeing this accumulation thing really hitting it hard. The MACD has been almost 0 for 3 days. I rarely ever see this. Basically, no momentum, no movements, which is not a bad thing. Accumulation is not a bad thing because it stabilizes and it doesn't tank, but it shows there's a push in both ways. And we all know eventually, the intrinsic value of SNDL continues to go higher, and with the raising of price over book, as I told you, it's actually undervalued compared to SP 500. Nonetheless, the moving averages you can get to see here in terms of the trading action zone, between the 10 SMA and the 30 EMA, where positive reversals are likely, is between $1.43 and $1.37. So it has a safe haven underneath. The moving averages show a bit more of an accumulation period here, so that's fine. It's all converging and they're still within the band, so we don't need to worry about that. The stochastic fast and stochastic slow are both almost going on a horizontal line, which also indicates more of a continuation of that accumulation. Now, coming on towards Fibonacci retracements, let's take a look into, let's say, the 39.6 and 0.14. And what we're seeing here is a significant support sitting at the 104. Significant resistances are 160, 205, 250, 314, and 396. We can go ahead with normal price line action to try to determine where these supports and resistances lie, as we usually do. The really strong support here is sitting at $1.39. That's an interesting one. Following to that is $1.09. Again, 92 cents, 76, and then down to 49. Significant resistances, we're seeing a really strong one hitting $1.54, then above $1.74, 209, 201, 225, and then we're looking at 243 and 4. And it comes to the question to Ed. We thought earnings were good. We saw a really good improvement in terms of their cash, their debt free, all that stuff. What's going on? Well, here's the thing. It's part of it is buy the rumor, sell the news, and a lot of people are trying to flip this for 1,000% in 1 day. If you're in, this one becomes a unique opportunity where you're not really trading this one per se. You're more of investing, and if you're investing here for the longer term, this one has a potential because it's a company that really came around. Well, major part of thanks to us because we pushed the prices intrinsically. We believed in a company. They released more offerings and they released more cash, which is a good thing. But they do have a good strategy of investing in other companies, etc. And the things looking pretty interesting for this one for the years to come. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.